This is problem 4-4A on page 218. And on this one, the unadjusted trial balance of Lakota Freight Company at March 31st, 2014, the end of the year, is as follows. It gives you then 5 pieces of data to do year-end adjustments. You're to enter the unadjusted trial balance on an end-of-period spreadsheet and complete the spreadsheet. The additional accounts that are needed are wages payable, supplies expense, depreciation expense for the equipment, depreciation expense for the trucks, and insurance expense. And then do the multi-step income statement, a statement of retained earnings, and a classified balance sheet. Once again, it gives us a check figure of net income of $51,150. So I've already entered in the unadjusted trial balance, created the formulas for the adjusted trial balance, and break out the income statement and balance sheet accounts. So item number A is supplies on hand on March 31st are $7,500. So they have an unadjusted trial balance, a balance of $30,000, which means we still have $7,500 on year end, so we used up $22,500, and that's going to be supplies expense. Insurance premiums expired during the year, so it tells us $1,800. Prepaid insurance had a balance of $3,600, $1,800 of which are now expired, leaving us with $1,800 unexpired. Depreciation on the equipment is C, and it tells us $8,350. That goes to the accumulated depreciation for the equipment. And then D is $6,200 in depreciation on the trucks. And then lastly, wages accrued but not paid. So wage expense, E, is $600. And that is going to be wages payable. So that's our adjusted trial balance, and once again, the net income, the difference between the sum of all the credits and minus all of the debits, is $51,500, which is in fact the check figure that we were given for net income. So we're going to have Lakota Freight, the income statement, for the year ending March 31st, 2014. Revenues consist of service revenue, which equals $160,000. Operating expenses, consists of wage expense, of adjusted balance of $45,600, and we have all of those expenses. They're all operating in nature. So total gives us net income. There we go. Okay, so that's got a bottom line, and this has a top and double bottom. All right, statement of retained earnings. That is also for the year ending. Retained earnings on April 1st, 2013 equals the unadjusted balance on the balance sheet, which is $70,000. To that, we're going to add, net income, which we just calculated. Oops. Let's change this. This is minus that. It's a positive number. There we go. That gives us a subtotal. And then less dividends. Of 15,000, and that gives us retained earnings on March 31st, 2014. Okay. That's the statement of retained earnings. And then our balance sheet. As of 31st, 2014, we have assets, current, assets consist of cash, there are 3 of them. Total current assets, and then property, plant, and equipment. Consists of the equipment, which is 110,000 less the accumulated depreciation on the equipment. The truck, 60,000, trucks, plural, and 21,200. So the book value on the two of them, let's move all this over one column, which gives us total property, plant, and equipment and total assets of $136,750. Liabilities. Current liabilities. Equals the accounts and wages payable. Accounts payable is that. It's two of those, which gives us total current liabilities, or total current liabilities of 4,600. Stockholders' equity. Consists of common stock. Oops. And retained earnings. Common stock equals 26,000. Retained earnings, we just calculated 106,150. That gives us total stockholders' equity and then total liabilities and stockholders' equity of the same $136,750. That's it. Like I said, I'll post the start of this one as well as the video.